Well, with inflation remaining sky high and the economy tightening, the question for millions of Americans, is it time to hunker down on our current job, or is it time to make a move? Well, numbers from the Atlanta Fed actually suggest the latter. Guy Berger is the LinkedIn principal economist. Ali Garfinkel is with us as well. Nice to see you both. Guy, the most recent data shows those who stayed in their job saw an average increase of 4.7% in salary, but those who bounced saw a 6.4% bounce. That's the largest gap in 20 years. What do you think's behind that trend? And do you think it continues in the face of a potential recession?
Well, I think there's a situation where, whatever happens in the labor market going forward, it's still extremely tight. There are indicators. The unemployment rate is back around where it was before the pandemic. And if you look at other indicators like job openings, hires, quits, it's even tighter than that. So there are opportunities for workers that switch to get big pay raises. And that's definitely one way you can take some of the bite out of inflation. Though, as you noted, even that pay growth for job switchers is still short what the CPI is currently running at. So I think that workers are still, they're having to run really fast just to stand still on their pay.
Guy, I want to point out tech here specifically for a couple of reasons. The primary one, of course, being that we're used to thinking of tech as this booming sector, but LinkedIn tech hiring is down more than 9% month over month. How are you thinking about that?
Yeah, it's a great question. I think that there's really two parts. The first is that last year, our hiring data has been on LinkedIn hiring rate has been pretty strong for quite some time, but I think it's not been growing that much since last year. For tech, that wasn't the case. Hiring just kept rising and rising and rising, at least to the end of last year, and then it was level. And now it's coming down much faster. It's almost like, I would almost say it's kind of like a boomerang, that it went up faster and then it's coming down, more sharply. I think this is because to some extent, the sector really overextended itself toward the tail end of this bull run. And now it's sort of the epicenter for pulling back the fastest. We haven't yet seen it in large scale seep into the rest of the economy. But, if we're worried about recession, one thing we're going to be keeping an eye closely is whether other sectors start following tech's lead on the way down.
I was going to say, it sounds like you're concerned that that's possible, but the layoffs in tech specifically, a lot of them have been at startups that really overextended themselves, but not all. What's kind of your take on where the layoffs fit into that puzzle and how long they might last?
Well, I think there's something you said that's definitely right. Like if you look at where the layoffs are concentrated in tech, they are particularly concentrated in certain types of companies. We see that in our data in the sense that, for example, you look at overall job postings on our site, they've generally kind of been level for most of this year. But what they look like, again, is sort of this microcosm, this sharp parabola arc, where they were, for small companies under 200 people, they were zooming up, and now they're coming down relatively fast. So it does seem like the pain is concentrated, and I think it's worth just keeping a very close eye on, is it spreading? Is it bigger companies that start laying people off in tech? Is it non-tech companies? There are a few anecdotes here and there. What point do anecdotes start turning to something else? We've seen, outside of LinkedIn data, we've seen that the initial claims data, that's a layoff proxy, going up. We've seen continuing claims, which are an unemployment proxy, finally start to rise a little bit. So again, this question about what point do the ripples start being big enough, they move the meter on, for example, the monthly BLS report for the entire economy, is something that I think is an interesting question.
And Guy, I want to ask you, in terms of generations, those who are able to sort of make the job move and do well, is it affecting different generations differently, or are some really coming out ahead, obviously depending on their different starting points?
Yeah, it's a great question. I think what was interesting to me is I've looked at a lot of this data, and we're sort of used to talking about millennials, about Generation X, about the baby boomers, now Gen Z coming in. I think there's actually a pretty sharp difference between different folks in Gen Z. If you look at people that are sort of in their late teens, that's a part of the labor market that's actually recovered really strongly. Employment in that group is actually above where it was prior to the pandemic. If you look at the share of people in their early 20s who have a job, that's still lower than it was before the pandemic. I don't know what's causing, let's call it elder Gen Z and younger Gen Z to diverge. I wonder if that's to do with college enrollment, something like that. But it is interesting that you're seeing these different patterns even within that group.
You talked about the concentration of shrinking growth or jobs in the tech sector, but it's also the growth we're seeing is in a region, the South, Dallas, Houston, Nashville. Why do you think that is happening, and how long do you expect that to continue?
Yeah, it's amazing. I think that even as we've seen, some cities hiring like cool down a little bit, some of these Texan cities hit their hiring level on record in June in our data. So they kind of stuck out as sort of moving in opposite direction, a positive direction. I think it's still the story that I think it's a story that's been going on for decades and then really intensified, once the pandemic began, that, these places to live offer generally, combination of pretty good amenities, good weather, relatively low taxes. And I think that's appealing to a lot of people, and they're moving. There's a lot of opportunity with, maybe right now during summer it feels a little hot, but during much of the year, relatively good climate.
And Guy, what's your understanding of what's bringing people to places like Austin and Nashville in such large droves? Does it connect back to tech?
I mean, it's tech, but it's just in general, lots of jobs, some affiliated with tech, some not. I think in the end, another thing that's going on, I think it's really important, is a lot of these jobs, it used to be that you'd have to live where the jobs were. And I think with the rise in remote work, both, the availability of jobs and people's desire to work at these jobs, people have the option, even if they work at a tech company that's based in San Francisco or in San Jose or Santa Clara, they might have the option of living in a place like Nashville or Miami. And I think these things are really drawing folks to these cities.
And Guy, a lot of people are still debating who has the upper hand in this sort of tight market, since we are seeing some layoffs, we are seeing a bit of divergence depending on the industry that you're in. And I did see an interesting comment on Twitter that says, you pay for talent and then you pray for retention. In terms of what companies really need to do to try and perhaps incentivize some employees to stay when they do have so many options, what are you seeing?
Well, I think it's, in the end, that picture has not really changed. It's pay and benefits. But I think that the combination of benefits that maybe were used to attract people in the late 2010s, right before the pandemic, is different. I mean, think about it this way. Remote was kind of let's call it a niche benefits. People that were asking me, are you tracking remote or flexible work as a possible benefit? And that was I would tell them, listen, I don't think this is that important. Now it is definitely extremely important. Workers want this. And a lot of employers are more willing to offer than they were. I think it is actually going to be an interesting barometer of the health of the labor market to see whether, for example, the availability of remote work goes up or goes down if we do tip into a growth slowdown or even a recession.
We do thank you for joining us today. Guy Berger there from LinkedIn and our very own Ali Garfinkel. Thank you both.